Uber Eats does basically double the volume of Grubhub. Let's break this down. I got $12 to $15 billion in value on Uber Eats. I got $12 to $15 billion of value on their stake in Didi. And then they have at least $30 to $35 billion of GMV in ride sharing. Uber is actually a value stock. My value investor friends out there, Uber's a value stock, okay? And I'm going to break down why that Uber is not priced correctly. We're going to have a few different numbers here, so you're going to have to stick with us, okay? First number, Uber current valuation, $53 billion. See it in there. And then if we look at Lyft, $12 billion. So you say, okay, well, there's a roughly a $40 billion differential in the value. So let's dig into that. We look at Uber's last quarterly earnings. They break down very nicely. The breakdown of their gross bookings. This is their GMV. So you look at Q2 here of 2019. You'll see that $15.5 billion in the aggregate. And then the dark green is the breakdown of Uber Eats versus Uber ride sharing. And you can see that kind of growing over the past few quarters. So basically what this is saying is that Lyft did, they don't disclose this anymore, but Lyft did $8 billion in GMV in 2018, right? Now what that means is if you look here in 2018, that means Uber ride sharing did about $32 billion.
So roughly 4 times.
Roughly 4 times. And that really didn't grow much from Q4 18 to Q1 19, but it is growing now in Q2 19 in ride sharing for Uber. So if you just say, if all things remain the same between Uber versus Lyft in ride sharing, it's 4x. Maybe it's 3.5x if Lyft gains ground on Uber and Uber loses ground in the US. The thing to keep in mind is, though, is $32 billion of GMV for Uber is not all in the US, that's globally.
Right.
And Lyft is just in the US, right? So I would say, if we just conservatively say, let's say Lyft has gained ground on Uber, let's say it's 3.5x the amount of the ratio of GMV from Lyft to Uber, and say Lyft has gained on Uber, and that differential has shrunk. Another thing to keep in mind here then is Uber owns 17.7% of Didi. Didi, in this article here, December of 2018, says they're trying to get around an $80 billion valuation.
Didi is basically the Chinese equivalent of Uber. Uber tried to operate in China for a number of years, and basically competing directly with Didi, and they were going heavily against each other in subsidies, both lighting lots of money on fire, and basically came to an agreement and said, we'll sell you Uber China, we get some equity in Didi. So that's where that stake comes from.
Their last funding round was about $60 billion. Didi. Now they're looking at about $80 billion. 17.7%. Basically, Uber owns between $12 to $15 billion worth of value in Didi.
Right.
And they got that 17.7% for at a $5 billion valuation, I think, where they'd maybe sunk a few $1 billion of cash into China. So I would say from an ROI standpoint, Uber doing Uber China worked out pretty well for them, right? So $12 to $15 billion today in Didi. Now, here's the other thing. Let's look at Uber Eats. Again, Uber Eats over the past 12 months is doing between $10 and $12 billion in GMV. Let's look at our friend Grubhub. Grubhub, this is Feb 2019. Q4 quarterly gross food sales were $1.4 billion in that quarter. So if we just annualize that thing, they're at what, 5.5 billion, call it 6 if they're growing that in 2019 in GMV on an annual basis. That, by the way, means that Uber Eats does basically double the volume of Grubhub. Okay, that's kind of crazy. What's Grubhub valued at? Oh, $5 billion. Public company in Platt. Okay. So that's one data point. Now let's look at which is basically almost call it like a 1x GMV to valuation
Grubhub
multiple.
Being a little more mature business, been out for a long time, so the growth multiple is going to be a little bit lower. Well,
that's the interesting thing. So DoorDash, the other big player in the US, says, this was from May of 2019, that they did annualized GMV of $7.5 billion.
Right.
Valued at $12.6 billion.
Right. So almost 1.5 GMV, basically.
Right. It's actually a higher valuation than what Grubhub is getting.
Right. Because I think in that case, investors are pricing in growth, basically.
Growth. Exactly.
Which Grubhub is not not as fast.
Exactly. So now that's at $7.5 billion in GMV. Uber is more.
Right.
Uber's at 10 to 12. I don't know. Even if you say, hey, well, they have more growth than Grubhub. Let's just say they have less growth than DoorDash. Give them a 1.25 multiple. Whatever. Call that another $12 to $15 billion of value on the Uber Eats business. So let's break this down. I got $12 to $15 billion in value on Uber Eats. I got $12 to $15 billion of value on their stake in Didi, Uber, basically Uber of China. That is basically $24 to $30 billion of value in basically this ownership stake in Didi, and then this side platform business called Uber Eats. And then they have at least $30 to $35 billion of GMV in ride sharing.
Right.
Which again is getting on a Lyft standpoint is getting, again, more than a 1x multiple GMV to valuation, maybe around 1.5, 1.25. So even if you could just give them a 1-to-1 ratio, let's say Uber's let's say their GMV has actually declined, right?
It's still not valued, all of that together, not being valued properly.
It's just, the numbers don't add up. Again, going back to what is Uber valued at today?
I think the only other thing that I would say might factor in is, let's say Uber has way more debt than Lyft. I don't think that's the case, though, which wouldn't explain the discrepancy in price.
Yeah, is the balance sheet weaker, or that kind of stuff. But all things the same. If you say there's $24 to $30 billion there, they've got $35 billion. Let's say $35 to $40 billion of value from the ride sharing part of the business. So that's what, basically $60 to $70 billion of value. And then you have a $7 to $17 billion discount because the balance sheet isn't as strong. It just doesn't add up. The numbers don't add up. And so I think if these things were properly priced in, I think there's just a lot of negative sentiment on the company right now. Right. And long term, I think they're just going to be able to use these network effects to compound upon each other, to apply pressure to these other competitive platform businesses, whether that's Grubhub and DoorDash in the US, or that's Lyft in the US, and then their international businesses. Yeah, long term, I feel very bullish on Uber. Especially given, this is just back of the napkin analysis, but I think it's hard to argue with $24 to $30 billion of just intrinsic value in Eats, and then their ownership stake in Didi.
Right.
And then it's just a question of what are you going to value the ride sharing at? And I don't think you're going to give it a sub 1x multiple of GMV to value. I just can't get there. Hi, this is Alex Mozed. Thanks for joining us on Winner Take All. If you enjoyed the content today, which I bet you did, please comment, subscribe, and definitely message me on Twitter when we're doing live streams. Also, please note, all opinions expressed about stocks or public companies on the show are exactly that, opinions. This is not investment advice. Don't act on it. WisdomTree licensed Applico's Platform Insights data product to aid in the creation of the Platt ETF. Thanks for joining us.